There is something new coming down the pipeline for Aerodrome that could majorly impact token value, and ideally a very positive way. Now, up until this point, there actually has been a decent bit of fear, uncertainty, and doubt surrounding this upgrade for Aerodrome. There's been a lot of people thinking that it might actually be a negative thing. The team is continuing to kind of claim very strongly that this will be a good thing for token value, and so that's kind of the route that things have been going. So of course we're going to be talking about all of the different things that are going on within the crypto space today. First off, if we go ahead and we actually look, you will see on the crypto bubbles that Aerodrome is only up about 1.5% on the week, actually down almost 3% on the day, and then down 30% on the month and 50% on the year, which is of course not necessarily the greatest moves from what I would consider a really strong project. But of course, there is substantial concern about how some of this stuff is going to work for Aerodrome. And so you'll see here on the kind of weekly chart, we actually have seen some pretty nice moves from many different cryptos, Aerodrome not really being one of them. Now, of course, there are a couple here that are negative, things like Zcash, ICP, Aster, Aptos, Trump, Starknet, all this other type of stuff. So at least Aerodrome is not negative, but it's definitely not kind of keeping up with the leaders that we have been seeing coming through this week. Now, again, there is some kind of skepticism about what is going on here based on the announcements that Aerodrome has made. There's a couple of different things that I wanted to show you. And then, of course, from there, we'll talk about kind of the implications of some of them. So the first thing you'll see, Aerodrome actually posted kind of what their circulating supply looks like. And you'll actually find, similar to something like ICP, there's about 50% of their total supply actually locked up in these staking protocols. The average lock duration is 3.7 years. So there is a constrained supply here for Aerodrome, which I do think is a relatively good thing because it does keep some of that selling pressure to a minimum. Of course, selling pressure can still happen, but it does minimize it to some capacity. So this is very good to see here. The other thing, and kind of the main source of much of the debate here, is you'll see here, we've got this Dex 03. Aerodrome has pinned this. They're saying, that this is the infrastructure of tomorrow. We're actually going to go through and we'll look at it in detail about what exactly they're trying to do. So they have been working with Dromos Labs. You'll see here that, Dromos is one that they're working with Velodrome and Aerodrome, and they're essentially kind of creating this new Dex 03. And that is what is supposedly going to bring so much value to Aerodrome holders. So let's go ahead, we'll check it out, and we'll see kind of what a lot of this means. So you'll see that there's a Rev and AER engines in the Dex 03 that would result in a 2.x more net value to token operators. And then of course they want to explain how this is possible. Now, if you look here, you'll see Aerodrome currently does about 75 million. The AER and Rev engines are kind of expected to do more like 211 million. Again, there has been a lot of kind of confusion as how this exactly would work. So we do have this thread, and so I'm going to go through and help kind of break it down exactly what we would expect here and what we would see kind of coming out of this type of new arrangement. So you can see, to evaluate the protocol's economics, you have to first understand how token economics work. For most projects, revenue and incentives comes from separate entities. Protocol generates fees. The foundation and DAO accrues costs. So at a glance, meta dexes are at a disadvantage. You might see a chart like this on DeFi Llama and think Aerodrome is really unprofitable. This other protocol is infinitely profitable. This can't be the full picture since tokens aren't core to the economies of most projects. Operational costs don't show up at all. So if you look here, you'll see that this has basically 100% fees, no incentives, and then you'll see here on Aerodrome, you'll see that there are more incentives coming than fees, which is kind of the concern here. Now, part of the concern that people are kind of getting at here is, if obviously there's kind of a scaling effect with fees and kind of maybe a somewhat flat effect with incentives. We're not quite seeing that here, but the problem is people are like, well, if a lot of this is going to be farmed off to Dromos Labs, is this a bad thing for the Aerodrome token holders? Because a lot of the revenue that's going to be coming in is actually getting kind of spun through this different protocol, and it's also kind of working with Velodrome in addition to just kind of owning the whole stack. So again, this is kind of the issue. While many protocols look infinitely profitable, most tokens are infinitely unprofitable. Their primary purpose is to be hyped and sold to fund expenses. And unfortunately, that is kind of the sad reality of many altcoins. They're not there to actually make money. And that's how, that's one of the big things that I'm always talking about as it relates to altcoins is, how does this, what is the fundamental value? What is the reason to own the coin? Because again, if it's pumped to essentially fund expenses while all the revenue is going elsewhere, that is of course a problem. So you'll see here in MetaDexes, the tokens and the protocol share the same economics, so revenue and costs both show up in the open. Dex Economies must align the interests of the three stakeholders. So on MetaDexes, token holders transparently face dilution as a cost. The real question is how well these costs are balanced with other forces. This is why in MetaDex 02 we introduced automatic stabilizers. So you'll see here in this, you've got the traders, you've got the token operators, and you have the liquidity providers, and it kind of goes in a circle here, right? The traders send revenue to the token operators, the token operators actually send token rewards to liquidity providers, and then of course the liquidity goes to the traders, and this all moves in a virtuous cycle when it is balanced. That is kind of the key thing here, when it is balanced. And generally kind of what we've seen in the past to help explain which of the three pieces that that Dan here is saying is generally broken, is it's here where the token operators will essentially get revenues and that will be rewarded to the tokens, but then there's a level of inflation that goes to the liquidity providers, and then of course that goes to the traders. So there's kind of an additional piece here where more revenue is getting pumped in that is not necessarily sustainable, and that is kind of what Dan is calling out here. Now, together these stabilizers bought back and locked 14% of the circulating supply, reducing the net inflationary effect of emissions. In some projects, buybacks are offset by sell pressure from unlocks. So let's take a closer look at how this works for Aerodrome. And then of course you can see here, these are the buybacks that they've been going through. So this is a kind of an interesting chart where you can see how this has actually been stacking up over time with the buybacks and the new locks to essentially help help kind of reduce the inflation. And again, the inflation is generally what damages many of these protocols because there's just more coming in than people are actually wanting to buy. So in week 73, V token operators received 8.6 million in revenue, and the protocol produced 11.2 million in emissions to LPs, a net deficit. And that's all you see if you look at fees versus incentives. But with the 6.5 million locked, there was a 3.8 million deflationary effect on the liquid token economy. So again, showing this here, you'll see that here's the revenue, here is the emissions and locks. You have the locks, but then of course, here is the emissions. So there is actually kind of a net value going to token operators because of this being locked up. But again, at some point this does have to come due. So I would say the fundamental model is still slightly damaged, but they're at least kind of deferring it while they figure out some other issues here, which I do think kind of makes a little bit of sense. So again, this is why the MetaDex economic system is so powerful. It can consistently reward LPs excess value while still producing net value for token operators. And it only works because the token has a purpose and immutable claim on all future revenues. So again, they're kind of locking these tokens today for promise of revenue in the future. This works as long as revenue continues to grow. If it ever stops, then this does kind of somewhat turn into a little bit of a death spiral, which is part of the concern that people have with Aerodrome, is like, if this works out, it will work out very well. If it doesn't, it's probably not going to work out very well at all, right? So following this thinking, over the last year, Aerodrome has consistently produced more revenue than net emissions, creating a sustainable system to reward LPs in excess of the weekly fees. This means that token operators earned 74 million more in revenue than was distributed in net emissions. Our critics would have you believe that Aerodrome is the inflation-only chart on the left, when in reality is the more sustainable chart on the right. The Aero economy has found balance of using emissions to accelerate growth while using locks in revenue to offset inflation. And then again, they have kind of a chart here that shows kind of the net positive. Now, MetaDex 03 will supercharge economic sustainability with Rev and AER engine. Rev equals more revenue from new streams. AER is reduce emissions out while maintaining competitiveness. This adds up to a 2.8x better outcome for token operators on top of the stability of Aero today. So you'll see here you have Rev, which is kind of a new stream that people are expecting to see. You also have AER, which is again kind of the cut in the emissions here, and that is kind of what they're claiming as the net value to token operators is kind of the cut here, as well as the jump here. So again, we'll have to see. This is all kind of expectations, and things can change all the time here. But essentially, he's going to leave us with this: when back testing all of the tools available in MetaDex 03, net realized inflation is a full 85% lower than the initial emission schedule, a stepwise improvement in MetaDex economics. More to come on how we'll simulate this and how we simulate this will affect Aero after launch. So again, this is another thing the team is consistently kind of maintaining that this will be a good thing for the Aerodrome. There obviously are people that are skeptical and have some concerns here, just given to, you know, kind of some of the risks that might be. Again, if this doesn't go well, it's probably going to go really badly, and if it goes well, it will go absolutely wonderfully. So that is overall kind of one of the things I wanted to go over and kind of hopefully explain in a little bit better detail why the Aerodrome team is saying that this could massively impact the profitability of the token in a really positive way. Now, again, I kind of maintain, you know, kind of standing by the title that I said, which is this will majorly impact Aerodrome token holders. Hopefully it's in a positive way, as I do hold the Aerodrome token, but there is that possibility that if this doesn't actually play out like the team expects, it could go very negatively. But again, I've actually been quite impressed with what we've seen coming from the Aerodrome team. I think they're positioned quite well with being kind of the main operator within the base ecosystem. I think they are set up, and I do think that there is enough here to kind of warrant, you know, kind of sticking around it and seeing how this goes. And so that's one of the things that I'm going to be taking a very close look at and just monitoring quite closely from there. And, you know, we'll kind of go from there. Of course, if you did find the information in the video useful, please, you know, like and a subscribe does help a ton, especially in a difficult crypto market like we are seeing right now. Also, if you have any thoughts, questions, feelings, anything like that, just drop those in the comment section below. I do try to read and respond to all of those, as well as if you are looking to accumulate Aerodrome, you're looking to trade on, you know, the liquid crypto markets, do anything like that, I do have those affiliate exchange links in the description below if you are interested. Of course, that does go to support the channel, which is a huge benefit to help, you know, provide for the operating costs and everything of the channel. So again, huge thank you to everyone for watching and supporting and all that type of stuff. Really appreciate all of it. We'll see you guys in the next one. Thanks.